A number of banks have released their results, and this point to fairly good performance last year. Now, there have been questions within the business community wondering how banks manage to make it at a time when the economy seems to be struggling. Because if you ask a number of businesses, they would tell you last year, 2023, was not easy for business. However, several banks, especially the big boys, today reported northwards of 100 billions in profits. Now, we're picking the mind of one of the captains of business in this industry to find out how his bank fared and what drove that good performance.
I think one of the things that I've indicated is that as an institution, as Absa Uganda, when we look at our strategy, we focus on three key pillars, and that is around growth, it's around efficiency and returns, because these are the elements that ensure that we give a good return to our stakeholders, both at a local level and at a regional level. By local, it means the government authorities, it means our customers, it means our employees. At an international level, it means that we focus on providing the necessary return to our shareholder. So in summing up our performance for 2023, one of the key things is from a growth perspective, you continue to see that from a growth line perspective. 4 years ago, we were generating revenues of 316 billion. So if you look at 2019, 2020, we were flat at 316 billion in terms of overall revenues generated. Fast forward that to 2023, you will note that the numbers that we produced today, that we presented to the market, will show that we have increased from 316 billion 4 years ago to 474 billion. And that shows the response or the focus and results of the focus on execution of the strategy, focus on having the right people in the right roles to ensure that we are able to deliver a service to our customers. So the continued focus on driving growth through servicing our customers, through our various digital platforms, and also just customer relationship management. So that is the ethos of the strategy that we are driving from a growth perspective. And I think what is critical is to look at the shape in terms of our overall balance sheet. If you look at where we ended 2023, we have a total loan portfolio of just under 1.8 trillion, about 1.788 trillion to be exact. And out of that, we have in excess of 250 billion as loans to agriculture, the agriculture sector. In 2023 alone, our net growth in terms of disbursements to agriculture were close to 100 billion. So you can imagine the incremental growth in relation to the previous year. So why is that important? That is important in that it feeds in to the opportunity that we see. When you see a growth in exports at a national level on a year-on-year basis, that is speaking to the opportunities that there are in agriculture from an export perspective. And in my mind, I tend to believe that because of some of the disruptions that you see in the global economy, those provide us with an opportunity to export more to areas that previously we possibly did not export to as a country. And really, it continues to be an area of focus for us because it is one of the key economic drivers of our economy. Look, we are deliberate. I think one of the things to appreciate is, as Absa Uganda, we are one of what are called the domestically systematic important banks, and we are also a primary dealer for government security. So we have an obligation to ensure that we participate in all government paper auctions as a way of managing the overall economy and supporting the government agenda. That is quite critical. But if you see the ethos of our strategy is to focus on growth, is to focus on efficiency and returns. And growth means you focus in products that give you the greatest returns. If you look in detail at our construct of our total asset, our total balance sheet is around 4.6 trillion Ugandan shillings. Out of that, slightly over 20% is investment in government securities. Total loan book is close to 50% in terms of private sector credit and lending to individuals. So from that sort of construct, it shows you that it's a fair balance. Our focus is, number one, lend to customers, which are individuals and corporates. Number two, ensure that we remain within the regulatory requirements in terms of the participation that we have to operate within reason. And I always like to dispel the notion that banks are not lending. We are lending. If you look at the growth that we posted, 200 billion in loan growth on a year-on-year basis. That's a 13% growth. That demonstrates that yes, Absa Bank is lending, banks are lending, and for us to continue to be relevant in the environment or in the economy, it is imperative that we continue to provide lending as we grow deposits to drive that particular growth. So as I was saying, Charles, I think the starting point is a week ago when the central bank governor, acting governor, issued a statement, the monetary policy statement. He spoke about geopolitical risks being one of the things to worry about going forward. But on the positive note, he alluded to the fact that the economy shall continue to grow, and it is estimated that in 2024, the economy is going to grow by 6%. And this is largely driven by investments in oil and an increase in exports, which are largely driven by agriculture exports and minerals. So to the extent that that comes to fruition, I remain cautiously optimistic that there will still be opportunities for banks and financial services providers such as ourselves to continue to participate in terms of financing various activities. As we presented our financials for 2023, one of the things that we saw, which reconciles to the increase in exports, is an increased appetite for trade and working capital products, which essentially are skewed towards supporting export-oriented entities. So we look into the future with cautious optimism. Obviously, the greatest risks that we see as of now are geopolitical risks. I say that any estimate or prediction of what will happen in the future is as good as what you know today. Because a week ago, we would not have known that Iran would be making an attempt on Israel. So for me, that remains the top risk that we need to watch out for.
If you ask a number of analysts, they'll tell you that one of the low-hanging fruits that Uganda has to transform this economy is agriculture. However, the way we practice agriculture in this country may not see us go far. In this segment, we try to find out why NSSF has chosen to go into that sector to support especially the sustainability aspect of agribusiness in Uganda.
I think the biggest intervention needed, and I'm going to speak very broadly, is how to organize the ecosystem. When you look at things on the supply side, a lot has been done by government on the supply side, on things like fertilizers, inputs and things like that. But the big issue right now is demand. How do you create markets for these farmers so that their earnings can actually increase? And that's the one space that NSSF wants to play a catalytic role. We want to create a platform where produce of farmers can be off-taken so that they can earn more money.
NSSF's interest in the agriculture sector comes at a time when several experts are calling for improvement in agricultural practices to ensure food security for the country with one of the fastest growing populations in the world, but also to improve Uganda's contribution to meeting the global food demand, given its comparative advantage in the sector. According to the United Nations, by 2030, Uganda's population is projected to be between 58 and 61 millions, depending on the fertility rate assumptions, of which more than 31% will reside in urban areas and will demand more food. From the global market's point of view, pundits know that poor standards remain a major impediment, keeping Uganda from occupying the right global agricultural production position.
One of key aspects to assess for international markets is to invest on standards and quality. This has been an important dimension of agriculture production, where we strongly believe that in order for Ugandan farmers to continue to have access to global market, investment in quality control and investment in standards is of paramount importance.
Experts are also paying special attention to climate change, which threatens to take away the natural advantages that Uganda enjoyed in the past.
We have seen erratic rainfalls, we have seen prolonged droughts, so climate change is with us. So with FAO, we've been working with the farmers, particularly in the cattle corridor, but as well as in the northern and Karamojan region, to really build a climate resilient agriculture production in Uganda. Looking at ways that we introduce crops that are resistant to the climate shock. Working with the farmers for them to improve on their agronomic practice.
As Uganda eyes becoming a middle-income country by 2040, which is just 16 years away, having zero hunger for its population and transforming the lives of those depending on agriculture, who are over 70% of the population, becomes crucial. The coming on board of partners such as NSSF, a fund with a kit in the excess of 18 trillion shillings, and Food and Agriculture Organization, FAO, is considered timely. We'll now take a very short commercial break. Money and Markets continues after this break.